tariff news are not new news, but new news every day. It's all happening again. And all over the world, all the businesses are feeling the pressure. I'm Edith, this is Mandy, we are from PropertyBank. So everybody's talking about tariffs, the trade war, tensions, and also the supply chain disruption.
Yes, indeed. They are all over the news. But for commercial and industrial property, is this a threat or an opportunity?
Well, that's what we'll be unpacking and looking into business space strategies. And for Singapore, how to optimize what you have. And for overseas companies, is Singapore still a tax haven?
Let's dive in. Edith, what's happened with all this tariff and how does it exactly affect our business?
Well, imagine this Coke. And this one here, if you look at it, it's got the raw materials on the outside, the aluminium, the can, and inside it is all sweetness. Okay, this is basically made up of syrup water, some ingredients, and it's actually multiple ingredients all together. Imagine this is manufactured in China and then shipped to USA. Well, last time, one sip probably equals to 10 cents. These days, with the tariff, which I don't know whether the magic number will keep on going up or coming down, well, this will cost multiple times if the tariff war continues. And with the retaliation or equal basis, by looking at this Coke can, you know that businesses are all in scratching their head if their tariff percentage is on the high side. And that impacts, both China, US, and the rest of the world. And I think Singapore, for now, we're just at 10%. It doesn't sound bad. But, however, if you imagine that we also import the goods in Singapore, and I think that's actually bad for everybody. It's like some economists would say that it is, to a certain extent, like inflation that's happening as well. And I think this is, again, costing some chaos, and that's why businesses are worried.
Yes, indeed. It sounds like it's a very unstable footing for global businesses. If that sounds familiar, we have been here before.
Well, indeed, that was 2018 and 2019 when there was this US-China trade war. And back then, the non-oil exports, in fact, plunged double digits, including the electronics, and that was really jialat.
Yes, I remember it hits like leasing in places like Tuas, Woodlands, because of the production dropped sharply.
Yes, and during that point in time, leasing was a bit slow, really slow. But on the flip side, we have companies from Hong Kong and China coming into Singapore, setting the regional HQ. So when the world is risky, Singapore feels safe.
Yes, we are safe, neutral, and plugged into the regions. That gives us the cutting edge. So, Edith, shall we talk about what actually happens on the ground now?
Yes. Let's talk about the low costs of manufacturing. Certainly, people choose China. Right now, China and Vietnam are quite badly hit.
Yes. Then, based on now, according to the list, China is facing 125% tariff. But compared to Singapore, which is just 10%, that's a very big difference.
Yes, and if you look around for Singapore, if you say, I just want to manufacture in Singapore, it's kind of tough for the lower costs of manufacturing, requiring a lot of labor. But look at Singapore, we also have tie-up in the region. For example, the Singapore Johor Economic Zone. And, that's where companies will write on the Singapore as the regional hub with the hardcore manufacturing in the surrounding.
Yes, indeed. We are seeing actually a lot of high-value industries like semiconductors, clean energy, as well as AI, with Singapore as their base. So they are actually setting up in Singapore.
Well, for some first mover advantage, in fact, last year we did a deal which is an IoT company already moved into Singapore, and that's actually out of Taiwan. In fact, many of such companies, they use Singapore as a base, and with that, in fact, Singapore quite neutral, so they are quite safe. And looking of which, the hubs are like, for example, Punggol Digital District, and also the Clean Tech Hub. So we do have such infrastructure supporting them.
Yes, indeed. For logistics, they are also adapting. So they are, for those who are like forecasting the markets, they are actually stockpiling inventory. So this, for the short term, they are driving up the warehouse demands. So yeah. So but for long term wise, I think a lot of them are waiting.
Wait and see.
Now let us look at the office sectors. I would say the outlook here is two-sided. So on one hand, businesses like shipping, trading firm, they are more cautious.
Yes, definitely, because they are trade reliant. So these companies are definitely very cautious right now. Whereas for the Grade A CBD office, in fact, we have companies that's like AI, basically the tech company.
Yes.
And what during this period where there are so many negative sales, I think some landlords have already started doing up the office space. Yes, which means that capital expenditure is reduced, and then that will give them a reason to move. And remember, Mandy, the fitted space that we have here.
Yes, the IOI Central Boulevard.
Towers, correct. So that is already fitted and in move-in condition. So this is one piece of strategy that I think major landlords can look into it.
Yes, agreed. As for the retail sectors, the sentiment is mixed. Tourist spending is definitely be more cautious, and due to the recent stock market, the volatility, so tourist spending and arrival will definitely be affected.
Definitely, when your stocks get burned, you burn your hand, how can you be going traveling, right?
True. So it will affect those like in luxury and retail travel. But on the flip side, on the other side, suburban retail mall and F&B sectors, they remain strong because driven by the strong local footfall. Then also some other brands like they also see Singapore as a launch pad for their regional growth.
Yes, I think for brands that see Singapore as the launch pad, they are so ready to expand within Singapore. However, don't forget about construction. So construction itself is having some headwinds because the materials that they import, there's tariffs on it.
Yes.
And I think that also means that higher construction costs that may be passed down to new launch buyers, and also the delay in construction.
Yes, I think by now most of our viewers are curious about where is the opportunity and what should they be look up for.
The pot of gold.
Yes.
So, well, I think while the market pauses to catch up, I think that's a golden opportunity also for landlords who actually look into the retrofit of the buildings. And I think that will, in fact, enhance the assets itself.
Yes, in fact, some of the office landlords are actually already adapting. So they are fitting out offices to let companies to shift it in. So they are actually offering agility and hybrid options. So this can help them to attract premium tenants.
In fact, some of the fringe city business park space or business space, for example, in Tai Seng, they have ready spaces for the tenants to move to. So on one hand, it's actually for the landlord to reduce the vacancy. On the other hand, tenants have a next generation office to look to, like our Tai Seng Exchange, which we have filmed earlier.
Yes, in fact, companies are looking more towards fringe of spring spaces. They are actually offering like better value and also flexibility and connectivities.
And on the investment side of things, we talk about, burnt in stock market, right? So I think many of our clients who dabble in stock market, they know that the fund is in the volatility, but sometimes if it goes up, but this time around, it's very difficult to catch. So another asset that they're looking at is in fact real estate. So just 2 days ago, I have a call from a financial advisor who firmly believes in insurance plus stocks. Right now, he's also shifting into real estate. And on top of that, for our Chinese investors who are affected by the trade war back at home, they look at also outside of China. And I think beyond the residential properties, they find that the non-residential properties, which they do not need to pay the 60% ABS as an attraction. So these are the opportunities and the pot of gold, and Singapore remains attractive because of us being neutral.
So if someone is watching this and wonder what to do, what will you be your advice?
The goal yield, right? Basically, people who are looking at what to do next, given this noise that you have to cut through, I would say that look at what's your current setup. So if you are trade dependent, for example, like shipping, I think it's kind of a lot of overheads that you have to look into, and you have to have the cash flow. One of the ways is to cut your lease. Landlords, I'm just helping the tenants. Okay. So on the other hand,
that's what PropertyBank comes in.
Correct. Yeah. So I think depending on where you're set up and also where your journey is. So for some, they will look at right now the very, very messy market right now. They would think that it may be a time to look at from rental convert to buying. So that's for businesses with the pocket and not affected by the trade tariff. It's a good time for them to look at landlords who cannot tahan without a tenant. And that's one time that the market is a good chance for you to look at.
Yes, indeed. And also if you are looking into like shifting or upgrading and wonder where it should be, then you can come to us.
Yes.
Can help you definitely.
We are definitely standing by during this period in time, and as always along your business life cycle to help you, because we believe that businesses bring meals to the table.
Yes, whether you are a tenant, a landlord or investors, there are ways to move in this market.
If you are ready to move with the market, PropertyBank is here to help with your space strategy. Well, reach out to us at 8333-1338 or email us at asked@propertybank.com.sg.
Or you can drop us a message or the comments in the comments below. Or we would like to hear from you about your plans and see how we can help to support you. So, bank us for properties.